Live in a constant state of fear and misery. No, you're me anymore. Live in a constant state of fear and misery. No, you're Live in a constant state of fear and misery. No, you're me anymore.
Hello everybody. So today is Sunday, March 31st, and we're bringing you Block Digest number 169 at block height 569,623. So what's cracking, guys?
Oh man, getting close to 600,000 on that block height, making it a long way. But yeah, it's I don't know, we're running a little late today because of this technical problems. I hope everything's coming through here fine. How are you guys doing today, Janine and Nopar?
I was waiting for you to go first.
Yeah, I was too. So
say, baby, it's not working.
I'm coding a lot, and with Wasabi we are approaching, and in the next release we are going to release something that will make Wasabi on network level privacy as in a theoretically as private as Bitcoin can be possibly. So right now it's like nothing to worry about, but there are some theoretical bullshit things, and now with the next release we are going to even get that out, and it will be, there will be no network level complaints at all. So it's gonna be interesting, and I brought you guys a question which I will ask at the end, so you could even participate in Wasabi development this way, because it's a really interesting development dilemma. And so
I already did.
The end.
I told you what to make the buttons look like.
I'm all about the participation though. Yeah, I'm down for that. How about you, Janine? How are you doing today? Those church bells still ringing in your ear?
No, they are not. Not as much.
Well, that's good. But how are you doing today?
I've just been catching up with work and stuff, and trying not to get angry about all the things happening with Julian Assange and Chelsea Manning.
Yeah, there's a lot going on. It's a lot to tackle. Speaking of which, so what's the first story up today, Shinob?
Well, first I wanna complain because Nopara is trying to get everybody to participate in Wasabi development, but he didn't listen to me when I told him what the button should look like. He's lying. He's gonna ignore everything you guys say. He's a fascist.
I mean, that was our strategy, right? We ask you that how should it look like, and we decide on the opposite, because you're a power user, so you're probably making the wrong decision. I think it makes sense.
It's because you're a fascist, man. You're fascist. Already. So, I guess speaking of network level privacy, I think after I get done breaking this down, you'll probably have a lot to say about this. But Jonas Schnelly has pushed a proposed new BIP to replace BIP 151, which was the proposal for end-to-end encryption on the peer-to-peer layer between different nodes. And this is pretty much building on that to the point of being an entirely new peer-to-peer protocol. So not just an encryption mechanism for the existing one, but literally reworking how the entire protocol would work from scratch. And most importantly, some of the design decisions that he's proposing here are made with the knowledge that you're not really going to be increasing the CPU load in terms of the different cryptographic operations versus how things are done now, while maintaining the same kind of message integrity checks, as well as laying the foundation to have completely end-to-end encrypted communications. And as well, Peter Woolley and Greg Maxwell are the source of a lot of the ideas in this BIP, and Tim Ruffing also gave this some review and gave Jonas some advice on the derivation schemes for the keys involved. But pretty much right now, the entire protocol is plain text. Anybody who is in between you and the node you're communicating with can view and intercept any type of communication. And it uses a double SHA-256 checksum cut down to 4 bytes to verify the integrity of the message matches the I guess announcement or pre-commitment to that message that's sent along the peer-to-peer layer. And this comes with a lot of problems in that, you know, I can see everything that's going on between 2 nodes if I'm sitting in the middle. So I can do a lot of silly things here in terms of attacks. I can redirect messages. I could potentially fake messages. I could prevent messages from arriving. So like, let's say you're a miner and there's a block coming from the other node to you. I can stop that block from getting there, and you'll never know. And if I'm literally something like your internet service provider, I'm in the middle of every single connection you have on the network. So while this isn't really a risk when you're talking about just another node operator, when you start thinking about, you know, higher level adversaries, there is a lot of damage that you can do to different participants in the network with the way that the peer-to-peer protocol is set up right now. And really, it would take quite a while potentially for a node operator to realize that things are going wrong. Like if you broadcast a transaction that never arrives at the other end, you're not really going to know that until you start trying to query or find that in the mempool of another node, or don't see it arriving in a block after a long time that eventually starts to get suspicious. And so the proposed upgrade for the peer-to-peer protocol is attempting to deal with, you know, all of these issues in conjunction. And effectively, it's something that could be potentially opt-in as things start going. But eventually, as adoption picks up, it would eventually have to become a requirement. And the previous version 1 of the protocol that isn't encrypted would have to be deprecated eventually. Otherwise, somebody could simply force the use of a non-encrypted connection by pretending to not support that, and kind of undermine a lot of the whole point here. So this would begin opt-in, and eventually you would have to deprecate the previous protocol and stop supporting that on new software, which would effectively fragment the network in terms of nodes that will only use the encrypted peer-to-peer protocol, nodes that don't, and the only way to connect those would be a customized bridge node. But pretty much the core of the protocol is a kind of interactive exchange where an initial node trying to create it would generate a private key, send a public key for that to the node they're trying to connect to, who would then generate a private key and send their public key back. And then from this point, you would have the material necessary to generate a shared secret that could be used to establish encrypted communications from this point. And one of the things with this is we have right now something called network magic, which is kind of just 4 bytes that allow you to see the start of a new message in the data stream from other nodes. Using this would effectively allow us to just get rid of that. But at this point, having done the handshake, there's actually a few different things that are done here. First, you generate ephemeral keys at this point from a stream cipher that's actually used to encrypt or decrypt data. And there's actually 4 different keys involved for each pair of nodes. So each node will have 2 keys, and they work in one direction. So I would have 1 key that I would use to encrypt the length header for information, and then a separate key that I would use to encrypt the actual contents of a message. And you would have kind of asymmetric keys where each key pair is used in conjunction with communications going one way or the other. And there's also a session ID generated here. And so kind of the TLDR of how this all works in conjunction is you would encrypt the header that would tell you how big the message is in terms of bytes. And that is a static 3 bytes of information. And from that point, any node can see when something new is coming in. You would get the first 3 bytes, decrypt that with the appropriate key, and then that would tell you how long the actual message you're being passed is, which is a variable thing. And then at the end of this would be a 16-byte message authentication code. And so the new way this is structured, you know the first 3 bytes of a message is going to give you the length information, which tells you how much of the stream afterwards is the message. And then there's always the 16 bytes at the end that's the authentication code to guarantee the message integrity. And the way this is structured, this is kind of what lets us throw away the network magic bits that previously in the current version of the protocol allow you to see the start of a new message so that you can actually parse things correctly. So we've seen how the encryption allows to actually deal with most of the man-in-the-middle attacks. We've seen how the structure of messages over the protocol allows you to still guarantee the integrity of the message sent without having the double SHA-256 hash that was previously used. So now the question is, how do you see that messages have been tampered with? And part of the process is for generating each message sent along the protocol is there is a counter that is incremented on both sides for sent and received messages. So to go back to the example, let's say you're a miner and somebody's trying to man in the middle your connection with somebody else and prevent you from receiving a block. Well, you would have the message that was the message you received prior to that. You would have the message attempting to send you the block, and then you would have the message afterwards. Well, right now, you can't really detect anything's going on until long after the fact. With this protocol, you would see that counter skip ahead of where it should be. You would see that a message did not arrive because there was the counter where it was at, where it should have been for the missing message, and then the message that came after that. And you can see that there's a number skipped in the incrementing of that counter there. So the second you receive the next message from that peer, you immediately see that something is missing here. There was a communication sent to me. I did not receive it. And so it kind of addresses really all of the issues involved with the current peer-to-peer protocol in terms of man-in-the-middle attacks in a very well-rounded way. And really the only kind of limitation, at least I see worth mentioning, is that there is a requirement to never reuse the same key and the same notes for signing the same message with the way that the entire encryption scheme works, because you open the potential for an adversary decrypting things. And as well, you cannot encrypt more than 2 to the 70 power bytes with the same key and notes pair, as that starts to create the same kind of issues. And so this is a very well-rounded, overall security improvement for how the peer-to-peer protocol works. And to boot, the one last thing that he's trying to include here is kind of a shorthand number code for different commonly used communications over the peer-to-peer network, like the invoice command, the receive headers command, the ping and the pong response command, used to establish the liveness of a connection, and kind of translating these into number-based codes, which could potentially be negotiated on a peer-to-peer basis between individual peers. You can actually shave off a handful of bytes in most of these messages, and in aggregate, actually see a not insignificant bandwidth savings over this. And so, honestly, I've been kind of irritated for a while at how this BIP has been really taking forever to go anywhere, or BIP 151, I should say. But after seeing this proposal, I'm actually kind of glad that it didn't, because this is a much more comprehensive, way to address a lot of the problems with the current peer-to-peer protocol, as opposed to us just having slapped just the encryption aspect without thinking about what else can be done here into things, and then having to keep hacking away at things. So I guess, Nopara says you're thinking a lot about network level privacy recently, apparently. What do you think about this?
Yeah, honestly, end-to-end encryption is super important, and I can't wait to implement it. I'm a bit older, so I won't implement it until other people will implement it first, because if I would implement BIP 159, then I could have thrown it out now because it didn't get enough traction. But anyway, this is one of the reasons why we broadcast in Wasabi to the server the transactions, because there is no end-to-end encryption. And the other thing is there is no IP address obfuscation in transaction broadcasting. But this is one of the reasons. And what can go wrong here if there is no end-to-end encryption? For example, in university, I logged into Facebook a long time ago, and HTTPS was not very common back then. So I logged into Facebook and I saw that I had a Facebook post that I promise I don't log into Facebook on a public network again without HTTPS. So HTTPS is the end-to-end encrypted HTTP, right? S stands for secure. So right now we are communicating on Bitcoin in a way that it's not end-to-end encrypted. The other thing is that there was a paper that's called Bitcoin over Tor is not a good idea. But it actually depended on the thing that Bitcoin over Tor, if you are touching exit nodes, then it's not a good idea, because exit nodes can modify your traffic. Now, but if we do peer-to-end encrypted communication, then exit nodes won't be able neither to see nor to modify your traffic. The exact same thing applies to ISP and probably a bunch of other attack vectors I can't think of. So it's really awesome. I wonder if it gets adoption soon or not. But yeah, it's great, really.
I mean, I'm really hoping this actually sees a lot of attention and progress. I mean, you know, it was really kind of, I hope at least this plays out the same way that Mask does. I mean, you know, the people have been talking about Merkleized abstract syntax trees since like 2013. And it even after it really became a heavy topic of design discussion, it didn't really go anywhere until Greg Maxwell came along and went, oh, we can improve this in a huge privacy way with things like Taproot and Graftroot. And, you know, since then, there seems to be a lot more attention and motivation to really, you know, keep pushing things forward. And I'm really hoping, you know, now that this has come back to the table as less of a let's get this one thing in here and more of a like let's comprehensively redo the peer-to-peer protocol, that this might actually get a lot more attention and eyes on it to, you know, help push it forward.
You know, actually, a lot of people are writing papers and then not implementing it, but people get really excited on the papers and then nobody ends up implementing it. It's interesting, but I guess that's how we reach consensus. If it's not good enough, then no one wants to touch it until another paper comes along that's even better.
You?
Yeah, development in you know, Bitcoin is slow. It's one of those things that takes a while to grind out, but you know, it's good to see, like you're saying. I mean, this come back around with some ideas there that weren't there before. So yeah, I mean, I know that it's a slow process and a slow grind, but it, you know, makes the cream rise to the top. You get the best stuff there. All right, yeah. So we took a good amount of chunk on that. So there's this interest.
Yeah, I didn't mean to like cut you off. Sorry.
No, it's all right. I was just gonna say, you know, yeah, let's go into what's going on with this title, this Wassup B, and this new animated series. It's pretty awesome. I caught it yesterday.
Yeah, I'm pretty sure everyone saw it already in of the digest audience. Bitcoin and friends.
Hold on. No, Para. I think this is the first time ever we're gonna have to give a spoiler warning on air. Everybody, spoiler warning.
Spoiler alert.
Okay, I wasn't trying to go into the things, but as one of the Reddit user noted, it's like taking all the big Bitcoin memes and putting them into one series, and it ends up being a huge 20-minute coherent meme, and I would say as enjoyable as a normal series on the television, or even more. So what I'm personally missing is that more insider jokes, but it's for the better, right? Because only we would understand the insider jokes. I don't like the drawings either, and unfortunately, I think because of the penis drawings and things like that, it's not going to get into so much into the mainstream or get into Netflix or something like that. Even though the quality and the story is good enough for that, so yeah.
Have you never seen Adult Swim?
I don't know what's that.
I want to go up there and get sexy with the captain, or whatever it is he said.
That's that Squidbillies show, huh?
I quit being Hunger Force, man.
Yeah, and like South Park, the animation style is just a joke, and I mean it works out. Like, and there is this F is for Family Bill Burr show on Netflix that is similar kind of animation style to this. Yeah, this what is this animated series called? Bitcoin and Friends. Yeah, this is interesting. Honestly, I thought it was funny, like you're saying. I mean, there was some insider jokes there. Definitely the whole Vitalik being it isn't Vitalik Buterin. It's just this guy named Vitalik that's understands the system at first, or he discovers it's interesting. I mean, like I get it. Like there's some parts in it where I was like, oh, wait a minute, what's going on here? But then it turns out to be a pretty good joke, and yeah, there was some interesting little. I mean, it kind of got me to where when the end happened, I was like, "Oh man, I want to watch the next episode." Like, why did that part happen with Hal Finney? Try not to spoil that much of it.
So it's actually called Metallic, not Vitalik. M like an M, Metallic. Yeah. Haven't you seen the next? He gave out a small. Now let's go into the worries, because putting Vitalik into this show, I'm afraid it's gonna get too much shitcoiny, and yeah, and he put out a new small video where he actually asks Vitalik to do the voice acting of the show, so that might go down not well, and Vitalik is going to take it, and then he's going to get some influence as to what to put in, and that can be dangerous there. But anyway, it's a great show. Everyone should watch it.
Yeah, I think that was more of a making fun of Vitalik than anything. But I still have reservations about this potentially being some attempt to kind of sneak a bunch of Bcash propaganda into the mainstream. I mean, like this, like we don't know who is doing this, and this just seems like exactly the kind of crap Roger would want to pull. I mean, it was a funny show, but like I'm gonna be, kind of keeping that in the back of my mind for a while to really see how it plays out.
I have an even better one that came up recently. I don't know if you guys have seen the show called The OA, but I think it was the latest season. The first episode is about this Vietnamese woman showing up at a private investigator's house. And this won't have any spoilers. So anyway, the first episode of the latest season was that this Vietnamese woman shows up at a private investigator's house. And she's all like, my granddaughter is missing. Can you help me find her? And he's like, well, do you have any money? And she shows him her phone, and it shows Ether. And he's like, what is this? And then someone had to translate because she only spoke Vietnamese. And the guy's like, oh, it's some kind of, internet coin like Bitcoin. And then it turns out there's this whole plot where, she says her granddaughter sent her this Ether, and I think it was like worth $30,000. And it's just on her phone. And this private investigator goes looking for the granddaughter. And it turns out that Ether is used as a reward in this whole game that is like literally getting kids addicted. Like it's almost like they're on drugs. They're so addicted to solving this puzzle game. The Ether is a reward for solving the puzzle, but
a use case for Ether.
People get killed. Yeah, I was like, wow, you're really putting together the drug aspect with ETH, aren't you? Like, God, I was so surprised. I was like, I couldn't believe my eyes when she like held up the phone. I was like, oh God, we're having one of those episodes, aren't we?
That show is like the incoherent lunatic ramblings of an SJW liberal trying to make a show with a coherent plot and winding up doing the exact opposite.
Yeah, so for anyone who doesn't know, it's like this show about interdimensional travel and stuff, if you care about that. But I just thought the inclusion of Ether was just so weird. and it wasn't really exactly positive because it ended up being like connected to this billionaire guy who's running the puzzle. And I mean, that's not a spoiler either. You find that out early on, but yeah. Weird.
Sounds like a unicorn, like trying to be Ethereum. But yeah, like this one, the mystery was really like you start off with, you see, you know, Bitcoin being created and Satoshi Nakamoto, you don't know who he is, but he's got a crying and he's got to go. And then the Bitcoin, what up, B? Like his name is B, and like he's always, you know, crying. He's a little worried. He's like, "Where's my dad?" He doesn't understand what's going on. He's trying to find out his life, and they go through some parts of the consensus aspects of Bitcoin and some of the history aspects of Bitcoin. So yeah, I can see it's kind of funny to me that you think it's like, well, maybe it's Roger behind this. Just like Roger, I don't even know if he's got the funding to put together this sort of thing, because the voice acting was good, the animation wasn't too bad. And I think it did kind of like, you know, it kind of does get like maybe a younger crowd sort of thinking about this in a different way. But yeah, we're definitely going to have to keep following it along to see, make sure it doesn't turn into Blockchain and Morty or something. I mean, like I haven't watched that one in a minute, but I mean, you know, yeah, make sure it stays away from all the blockchain madness.
Yeah, actually, what it did really well is that making Bitcoin a humanoid, like it's like I don't even know. So if I would have done that, it would have been so difficult. Like how do you do when the blocks are confirming, and what's happening to the Bitcoins? Like it's so interesting, and he still succeeded to keep it coherent. But I hope it's not gonna turn out to be a shitcoin or Bcash propaganda. I really hope.
Yeah, the next episode he's gonna morph into Bcash or something. I don't know. It's a funny show. I mean, but some people in the chat are saying it's a little slow. Whatever. I mean, you know, if you like it, you like it. If you don't, you don't. It's just an interesting little concept, kind of like people creating those children's books and etc. So back onto a technical topic.
Alrighty. So BitMEX research has knocked it out of the park yet again with an analysis on Lightning Network fee route economics. And this is just an absolutely phenomenal piece. And I like this just puts coherent numbers and analysis to what so many of us have been saying about Lightning from like as long back as I can think. And like the first thing that they do is obviously with the routing issue, separate the technical from the economic. Like the issue of finding routes as in a computer science problem, that is not a problem. That is something that has been solved for decades. That's not going to be a problem whatsoever. On the other hand, you have the economic aspects of available liquidity and really how that plays out in terms of an overall market. And so there's two ways that fees get broken up over Lightning Network. You have the base fee and the fee rate. And so the base fee is effectively absolute payment. Like if you route any payment through my node, you are paying at least this much money. So if I have a base fee of 1 Satoshi, no matter what the size of your payment is, you are going to pay at least a Satoshi to route through me. The fee rate is a percentage-based fee on top of the base fee that is tied to the value of the payment. So like if you route 100 Satoshis and my fee rate is, 0.1%, you're going to be paying 0.1 Satoshis to route that payment through me. And the other aspect is kind of the difference of inbound capacity versus outbound capacity. Like when you try to calculate really profit as a routing node on the network, you have to look at your outbound capacity, because those are the funds that are actually in your control. That's your principal and what you're trying to actually earn any kind of revenue off of. And really the issues is how do you kind of acquire outbound capacity versus inbound capacity. And obviously, any kind of outbound capacity can be created by opening a channel. Whenever you route a payment, you are creating outbound capacity as you receive through the loss of inbound capacity, or having somebody pay you. And inbound capacity, the inverse, you have somebody or convince somebody to open a channel with you, or you make a payment to somebody else, creating inbound capacity by spending some of your own principal. And a lot of the things that they did in managing this had to really be done manually, because there isn't really any software out there to algorithmically, automate the process of liquidity allocation, setting fee rates, optimizing the balance of your channel. And so, at least for now, like, these are things that a node operator has to manually pay attention to. In time, though, things like this are definitely going to be automated, and you're going to start seeing more algorithmic oriented tools to accomplish this type of thing. But mostly the core of this experiment was over a course of 3 months playing around with the fees that they set and kind of seeing what kind of a effect that had in terms of the overall revenue that their node made. And so from the 31st of December to the 24th of March, they conducted this experiment. And throughout, one thing I do want to point out, though, is throughout this entire time, their base fee was set to 0. So all of the fee revenue that they were making was entirely based on percentage of the payments value. And so that created a problem that I want to point out how base fee in a minute could have addressed. But effectively, they every 2 weeks, I believe, would change every period of 2 weeks, they would kind of play around with the fee rate and see what this did to the overall volume of transactions they were processing and how much money they actually made. And they found that pretty much starting from nothing and moving up, you would see an actual increase in revenue and transactions processed until a plateau point, at which point the amount of transactions and fees would start to go down. And they found that at around 0.001% in terms of percentage of the transaction value. And obviously, like, things are very nascent right now. Like, this is not at all a developed market. And so this point, this percentage point where fee revenue is kind of optimal, is definitely something that is going to move and kind of ebb and flow based on the overall maturity of the market and market conditions. And so to get into kind of the issue that I wanted to bring up regarding base fees, and remember, their base fee was set to 0. Most of the revenue that they earned, when you take into account on-chain fees to manage and reorganize liquidity in their channels, actually wound up being negative once you take into account the on-chain fees versus the revenue they're making on the Lightning Network. And so this is something that I think is not really an issue in the long term, because this is what the base fee can be used for. Like, that is something I think over time is really going to be the major factor in what nodes' base fees are. They're going to look at what fees they will pay on chain, make an assessment of the opportunity cost and how long or low of a priority transaction they'll be willing to make, and they will set that base fee to compensate for that. And so that's something that BitMEX did not do in this research. And again, I want to point out that, right now, most of the people really dealing with routing right now are complete amateurs. Like there is not really anybody on the Lightning Network providing liquidity who is doing so at this moment to actually make a serious attempt at a return on investment as far as the principal put up for routing liquidity. And over time, that's going to start to change. And so for now, I think it's really going to take time before we start to see a substantial change in that makeup of people operating routing nodes. And so long as there are a significant amount of people out there who are willing to, do this in a hobbyist, non-profit motivated way, I think that's going to kind of suppress the fee revenue that you can make artificially to a degree until that makeup of, node operators starts to shift the other way. And one other thing that they actually identified was a lot of mobile wallets actually don't query the fee rate for a node frequently enough. And they found that when they altered the routing fees on their node, a lot of mobile wallets that were trying to route through them would simply try to route with the previous fee, and the payment would just fail because they had raised the fee and the proposed payment was simply rejected by their node. And so it's going forward probably a good idea for mobile wallet developers to have their wallet actually query for the fee rates for different nodes a lot more frequently, so that you don't have payments fail like that when it could really trivially be dealt with just by having them make sure that the fee they're attempting to pay with is actually appropriate for the nodes. And so overall, with the caveat of the on-chain fee issue, they found that the interest rate on return for principal averaged around 1% during these 3 months, with a high of 2.75%. And really, like, how this is going to play out, I think is really interesting in terms of the overall economics of like the entire Bitcoin ecosystem. Like, what Lightning is going to wind up doing is kind of setting a base interest rate for any kind of investment for interest-based returns that you can make with Bitcoin. Like whatever the interest level on Lightning is, you're going to have to exceed that in order for somebody to decide to go do something else instead of lock their Bitcoin in Lightning. And especially when you're talking about investors who want a low return for very low risk, something that's a lot safer. Like, this is going to be a very big base floor. And like one of the examples as to how this is going to kind of shift around an equilibrium that BitMEX made in this research piece is, like, imagine the Federal Reserve's base rate is 1% interest and Lightning Networks is 1.5. Well, it's going to be preferable to move your money into the Lightning Network. So what happens when the Fed raises their interest rate to 3% and incentivizes people to start pulling liquidity out of the Lightning Network in order to invest in bonds instead, because they can get a higher, lower risk return? That's going to draw liquidity out of the Lightning Network, which is going to cause fees for the Lightning Network to go up until that reaches an equilibrium. And so really, no matter what the situation is in terms of other things that can offer a low risk return on investment like this, Lightning Network is going to function in an equilibrium with these things and just establish a base floor. Like, you can always get this much return for providing liquidity for the Lightning Network in a very low risk way. And so it's effectively a completely organic, market-driven interest rate that's going to create a foundation for anything that can produce that kind of return.
Oh shoot, I'm on the wrong tab. Yeah, man, this is awesome to see an exchange doing this level of research on doing this all this second layer governance and trying to build out best practices for that and trying to find ways to create, like you're saying, this interesting way to build an interest on your Bitcoin by providing liquidity for Lightning. That definitely sounds interesting and some promise there for all these exchanges that want to implement this type of technology. Let's just go in for time savings here. Let's jump right into the next one because it's on the same subject. So another great advancement for the Lightning Network happened just a few days ago. On March 27th, Zebpay announced they successfully integrated the Lightning Network. Zebpay is an exchange app based in Singapore with headquarters in Malta. They were also India's first Bitcoin exchange. Last we spoke about these guys was in late 2018 on episode 129, Sat Your Ass Down, where we reported on them having to leave India because of the RBI circular. Well, now they have moved out of the area and all these jurisdictional pieces are in place. They can work on development without the worry of legislation getting in the way of the roadmap. Now, here's a couple of quotes from the announcement. CEO of Zebpay says, quote, "Making Bitcoin technology widely accessible is a key component of our roadmap. Today, with the integration of the Lightning Network, we have taken yet another step in this direction." Another quote, "We are excited to announce that Zebpay is launching its Lightning Network integration starting today. Zebpay customers from around the world can use the BTC balance on their Zebpay wallet to make payments in a flash on the Lightning Network." So right now, Zebpay users can make up to 10 transactions a day, up to a maximum daily value of 0.002 BTC. Each transaction will keep fees as low as possible on the users. Right now, that's as low as 1 Satoshi a byte. The limits will continue to be revised as the platform evolves. For right now, all these low fees are on Zebpay and won't be charged to their users. This is all about helping build out a very profitable exchange model in the future. Another quote from the statement: "As we continue on our mission of setting crypto free from the shackles of trading fees, we are committed to keeping the cost of adopting this technology low for users across the globe. Zebpay would bear the transaction cost for all Lightning transactions done from its wallets and continue to evangelize this technology." Close quote. So for right now, you can make payments over the Lightning Network with your Bitcoin balances at Zebpay. I think this is a great thing for Zebpay because eventually any exchange that wants to remain relevant in this game will have to switch over to this model of Lightning Network backends to keep trading fee costs down. And like you were just saying in this previous story about, just an extra way to earn interest off of your Bitcoin for your users. And I mean, interesting ways to build out the second layer governance backends and making it more profitable for exchanges. This whole next generation of exchanges are really going to be interesting to see them get built out. So, do you guys have any comment on these this whole Lightning and exchange stuff?
Yeah, I mean, I think it's going to be interesting to see how they try and really build things out in that sense. But on the flip side, I'm not really too fond of like the way they're setting this wallet up to be used for payments directly from your exchange account. I mean, I forget the I think it was BitPesa. I'm not sure, but at the South American exchange that did a similar thing a few months back. Like I'm not very fond of these types of custodial payment wallets that tie things to your identity. I mean, like I have no issue with custody itself, but like you can do it in a way where you're not tying legal identities to things. And I just hate when I see things like this, do it the complete opposite way.
Yeah, I'd have to look into that too because they're headquartered in Malta. I would think they'd do that to try and lessen that sort of burden on the user. But I need to dig into that a little bit more too because, like we've been saying with all this Lightning Network development, I mean, it's important that we do it in a slow, organic fashion and not try to just overly get a bunch of people on this network to where everybody's starting to get de-anonymized. That's it's definitely not a good thing. So yeah, it looks like we just lost Janine. I don't know. She was maybe running into some internet trouble. Was she the one who was supposed to cover this next story?
Nope, I'm up next.
Okay, so this one is an interesting wallet and Lightning. So let's get into this one.
Yeah, so a couple weeks ago, Acinq's Eclair wallet set up the receive function on their testnet wallet, and they have just pushed that live on mainnet. So there is now the first wallet, mobile wallet, that you can actually use to receive as well as send Lightning. And it's really, it's not the ideal setup, but I am kind of happy the way they've structured this, given where the overall infrastructure is. And so obviously there's no like proper watchtowers deployed for Lightning Network infrastructure at all yet. So what they've done is kind of create a hybrid where they've increased the non-cooperative timeout for receiving things to 2 weeks. And so what they're doing is, instead of acting as a full watchtower that you have to completely trust, which is what they could have done, they've kind of made a half watchtower alert function. And they have a very clear warning that when the receiving function, which you have to explicitly turn on in the wallet, you cannot leave your wallet offline for more than 2 weeks. So as long as within the time period of 2 weeks, you can log in and check, what they'll do is they'll monitor things for you without being a full watchtower and warn you when you log back onto the wallet that something has happened, if anybody has attempted to use an old channel state. And then you can handle the submitting the penalty transactions and confiscating the funds from the channel. And so, it's not ideal, but I think it's a nice trade-off. Like if you do want to activate the receive functionality, then you're going to have to deal with a much longer timeout period, but you don't have to effectively just completely trust Acinq to not screw you over, to not have something go wrong with their service and fail to submit a penalty transaction if you've been offline for too long. And so considering where everything is at in the Lightning ecosystem overall, I think this is a decent trade-off at this stage to allow people to be able to actually receive payments without having to run a full node and a full Lightning client on a desktop or a computer at this point.
Yeah, I like these this Eclair development, man. This thing's been building out the right way, and like we're saying, these different governance models, best practices have to be built, and it's good to see this sort of development being built out to where, yeah, people actually can start spending on the Lightning Network with this non-custodial way, and actually, it just takes sort of different setups in the mechanics of the Lightning Network to achieve that, and that's where it's needs some outside the box thinking and some good computer science to get that done, and these guys appear to be doing that over there with Eclair and Acinq. That's good stuff. Janine, Nopar, do you guys have a comment on all this Lightning Network, exchange, wallet, non-custodial, custodial stuff?
I should start working on Lightning Network.
Yeah, you should. You can try to implement CoinJoin XT into Wasabi with Lightning.
Yeah, no way anytime soon. But the peer pressure is getting more and more, because so what I noted in the develop technical documentation is that if we are looking at the long term, blockchains don't scale. So integrating Lightning Network is something that no wallet can avoid. Otherwise, the wallet will get out of business, right? There's so many things to do, and I wonder when is the right time to start working on it too.
Yeah, there's definitely some interesting stuff going on there with the Lightning Network coin joins. That sounds interesting.
Come on, Nopar, you know you want to be the first person to implement Waxwing's private channel opening and closing. Think about the marketing, dude.
Oh, come on, like just simply adding Lightning Network is a huge enough job. It's like it's coming, but man. I just see the work there.
What are you talking about? Just copy and paste LND.
Oh my god. Yeah. We opened the show note bars talking about how much work he's doing. That would be it's a lot of work, but for sure.
Actually, the first big thing that we are doing is right now with the next release is the finally fix all the network level theoretical privacy things. Those can be imagined to happen or something like that. And the next one is I want to integrate Bitcoin Core properly, and maybe then either start working on Lightning or hardware wallets, or improving the coin join. Right there, I just said 5 huge work. Those have to be done. Like, oh man, yeah, that seems to be the order there.
Yeah, it sounds like a big lot to do roadmap. So I understand it's going to take a while, but luckily all this development is just going to keep moving forward. And so when it does come up, it'll be a lot easier sort of picking up what's the best routes.
Yeah, I mean, you can do everything in 1 month actually, but I'm very careful about this kind of things because of the support requests, right? If we are getting too many support requests, then we are not doing a good job in development. And right now, I think we got to a point where support requests are not that many anymore. Like they are less and less, and people seem to it seemed to be stable for everyone. So that's a good sign there, and we can move on to a big work, next big work there. Yeah.
Yeah, lots to do there. Janine, do you want to comment on this Lightning Network developments? Or you could take us right into this other stuff.
I mean, I would just say the same thing that I've said before, which is I might, like, considering the amount, I might be willing to use custodial stuff if it's more convenient, because if it's a small amount of money, like, who cares if I lose it? But if they're, regardless of whether it's custodial or non-custodial, if there's any KYC involved, I'm not using it.
Roger that.
Alrighty. Well, you want to take us into the next bit of news, Janine?
Yeah, so on March 29th, it was reported by Coinbase and The Block that Christine Sandler, the director of institutional sales at Coinbase, will be leaving or has already left Coinbase for wait, what? Is Rick supposed to go first?
No. Keep going. This is an after thing.
So anyway, she will be leaving or has already left Coinbase for Fidelity Investments. And she joined Coinbase exactly 1 year ago in March 2018. So it was basically 1 year at Coinbase. Now, if you think her name sounds a bit familiar, that's because on the 1st of this March, Cheddar published an interview with Sandler where she stated that the reason Coinbase acquired Neutrino from the whole delete Coinbase fame was due to a previous provider selling client data to outside sources. Within a week, Coinbase's only statement on that matter was that Sandler misspoke. You can see the whole delete Coinbase campaign on Twitter or the Block Digest episode between February 20th and March 5th or so for more information on that. But what I find interesting is that neither CoinDesk nor the block pointed out in their articles that she made this claim, even though I would argue that it was relevant. It's absent from their reports completely, and it's entirely possible that that when she joined Coinbase, she was on some kind of 1-year test period where they would reevaluate her employment after 1 year, which is why it coincidentally matched up with March join date, March end date. That could be the reason, but I think it would still be worth mentioning that her statement, whether true or false, about the data leak could have influenced the transition because it was kind of a big deal. The unnamed sources who apparently confirmed all of this to the block and CoinDesk are just claiming that it, quote, stemmed from a change in the direction of Coinbase's institutional business, and that they want to focus on crypto first and crypto native hedge funds instead of traditional markets and East Coast equity, which is where her experience allegedly lies. But at the same time, they say that she will be joining the crypto custody business as part of Fidelity Digital Assets. So I'm really confused here. Her experience is supposedly with traditional markets, but she's joining a cryptocurrency custody project? That makes no sense. Like, if you're going to leave Coinbase because you don't have enough speciality with cryptocurrencies, then why would you do exactly that at the new company you're going to? This just sounds like a bunch of wishy-washy language that could possibly be hiding something. But I don't know if we'll ever get any clarification on this because CoinDesk, Fidelity, and Sandler herself were unable to give further information about this. But yeah, that sounds completely weird to me, the way that they tried to justify her leaving.
Yeah, that just reeks of she got fired because of the entire PR backlash that happened because of Neutrino based on her comments. And she probably just ran off to Fidelity because it's another crypto business trying to court legacy money. And that's exactly where her skill set is, interacting with legacy players.
If you think about it, it's really fucked up, right? Because she got fired because she was honest to the public. What the fuck?
Yep.
Well, yeah. I mean, we don't know that, but that would be a much better guess considering how poorly these articles were researched. Like, seriously, do the people at the block and CoinDesk have did no red flags come up to them that it wasn't even worth mentioning? I'm amazed that they didn't even consider this.
Yeah, I don't know whether or not they're trying to be, I don't know. It's just like you're saying, the timing's weird. It seems a little bit like it is some pushback for what was said. And yeah, no part you're right. I mean, it makes me think, like, were they ever going to talk about that data leak if she didn't mention it? And, maybe that's the practice as usual. We know that Coinbase helps sponsor the block, and I wouldn't be surprised if there's something in there with CoinDesk too. I mean, it's like, maybe it's a mouthpiece for Coinbase trying to say like, we lost this person, it's yada, yada. Don't worry about it.
Well, I mean, I don't know about that because they've written it. I mean, it could be that, like, as a way to make up for the damaging stuff that they did publish with regards to delete Coinbase. I think the bigger problem is that their subscription widget for the block that's going through Coinbase. So if Coinbase cuts them off, they don't have a way, or at least, I don't know, they don't, at the moment, they don't have an alternative way to subscribe to the block, which is like a huge, issue in terms of, even if they did write stuff that was damaging to Coinbase's reputation, they can't really go deep in there if they have to worry about that.
I don't know why they did that. I mean, publication to be taken seriously. They came out in the space saying like, they were going to be non-biased and everything. And I mean, like, just set up a BTC Pay server back end for you guys. I mean, like, I don't understand why. But other than, you're trying to make it, I guess, easier for users to just, send you through their Coinbase account. I don't know. It just kind of shows who your audience is. All right. So what else is going on with Coinbase and I guess this whole DeFi thing?
Well, they are really trying to stick themselves as far into consensus processes as possible. They are starting to establish a staking service for proof of stake coins as part of Coinbase custody. And they're going to be starting off with Tezos because it natively supports delegated proof of stake, which means that the actual keys controlling a cryptocurrency can be kept offline and some other keys delegated to actually perform the signing for the staking process. And they're going to be trying to expand this as much as possible into other things with the maker nonsense on Ethereum as the next thing in their roadmap to create support for. As far as sticking themselves into the consensus process, they're specifically working with the MakerDAO team to ensure that things work with a smart contract they've set up for vote proxying. And honestly, the direction that this seems to be going is really unhealthy, I think, for proof of stake coins, despite them already being pretty unhealthy and broken. Because what this could wind up doing is just concentrating a vast majority of coins used to stake on these protocols in Coinbase's hands. And while they're rolling out in the next quarter of this year voting services so that holders can actually directly decide what to do with their stake themselves, it doesn't fundamentally change the fact that those coins are in Coinbase's hands. And if they can find some legal reason to receive a court order to anything that is legally justifiable, they can stop listening to whoever owns those coins on paper and do whatever the hell they want with them. And that could potentially give them a ridiculously disproportional influence on the forward progression in terms of the consensus mechanism on any of these projects. And honestly, I would not be shocked at all if this starts actually seeing use, if Coinbase starts trying to throw their weight around and effectively bully or pressure proof of stake projects out there that do not support delegated proof of stake into supporting it, specifically so that they can add that project to the roster of coins that they will provide the service for through Coinbase custody. But like ultimately, no matter how this really develops, like this is very unhealthy for the concentration of influence of any proof of stake process out there.
Yeah, man, I'm kind of curious about this whole DeFi, like, you know, they call it decentralized finance. And like I was reading an article on it from a publication, I will not be named, about this whole process and the way that, again, it's just very much like, you know, hey, this is decentralized because I say it's decentralized and I don't have to worry about what that means. And yeah, this whole idea of staking and this complicated loan structures and the way that these percents are determined. And I mean, it's interesting because I've seen, you know, these articles popping up about how, you know, MakerDAO can't keep DAI at the position it needs to be in order for it to be a stable coin. And yeah, that's all based off of this staking mechanism. It just seems like people say, oh, you know, cryptocurrencies are complex. I mean, to me, this sounds like, you know, it's already a lot figuring out the base layer or something. If you're lucky, you could start working on the second layer and figuring out the governance structures of that. But creating this complicated structure to try and drive token adoption and create a use case just seems like way out there. And I mean, it doesn't seem like anything to do with sound money. It sounds like crazy CDOs or credit default swaps or some BS nonsense like that.
What I find,
yeah, go ahead.
What I find really funny is that we saw the whole thing with BlockFi where they were offering accounts that could earn interest, and they were initially claiming it would be at like 6.2%. And then, as we discussed, I think at least once, like I think after a week, they said, oh, we've been so popular and people have literally given us $1 million that if anyone gave us more than 25 Bitcoin, you'll only get 2% now. And I don't even know if that was in the original terms, but it was just so hilarious how they changed the numbers that quickly, even though they were actually successful. And this thing with Coinbase is, once again, using this magical 6% yield. That's what they're saying. And it was so hilarious because when I saw this announcement, I started looking for other articles, and there was one that was announcing it. I think that was CoinDesk, and they were saying like 6%. Likely, they used the word likely 6%, so who knows whether that's going to change. But then already on the day of it being announced, there was an article talking about it from the Wall Street Journal that was saying it will likely be between 5% and 8%. So for some reason, like everyone likes this 6% number as like a yield or interest or compound interest. And I find that hilarious. Like, oh, look, BlockFi just did this kind of unethical thing where it's like false advertising. And now Coinbase is probably going to do the same thing.
Yeah, I saw that tweet. It's kind of comical how it all just comes about the same percents to try and attract the crowd. And yeah, it's just wild. I mean, like one of the things Coinbase was doing, not even the staking thing, but this kind of goes into our next story, is they're trying to educate people about these different projects. So yeah, we have another major bug in that project. That was this project. It was exploited a while back, but only recently we've seen some light shed on the matter. Masari reports that while conducting research on the top 50 crypto assets, their team found a significant yet lightly reported bug in the Stellar protocol. They say, quote, in 2017, an attacker was able to exploit a concurrency bug in the Stellar protocol's merge op frame do apply function and create 2.25 billion lumens, worth approximately 10 million at the time. The illicit inflation represented nearly 25% of circulating supply in April 2017, but public disclosures at the Stellar Development Foundation regarding the event were relatively muted, and no media seems to have previously reported on the bug or the SDS subsequent decision to burn an equivalent amount of the lumens from its community reserve to offset the illicit inflation. The affected addresses and related records of the bugs are no longer accessible on Stellar Expert or other block explorers, but our research team was able to track the historical transactions through the Horizon client transaction history. The lumens that was created was moved to exchanges and likely sold amidst the market run-up during the first half of 2017, close quote. So I get why it wasn't that widely reported, because April 2017, there was a lot going on in Bitcoin news discussing BIP 148, SegWit, Bitmain, and the ensuing civil scaling war. It seems crazy to me that the response to this incident was to burn a reflecting amount of the supply to counter the inflation. I'm pretty sure that would have given the attacker a much larger percentage of the supply, giving him more room to control the price. The speculation that the amount was sold with the market spike in May and June of 17 could be true, but I'm just wondering how the price charts still look very similar to all these smaller networks. Then again, around the same time, there were huge investments of dumb money coming into this space. So anyway, a Stellar representative replied to the matter saying, quote, Stellar was an emerging open source project with a small but dedicated developer community. Announcing the bug in our release notes therefore made total sense. That's how you reach those users. We mentioned it twice, in fact, in the notes, and we were very clear the bug had been exploited. We recognize that Stellar has since become significant financial software, and our disclosure standards have grown to reflect that reality. There's been no notable bug since, and if there were, we would disclose it in full detail as soon as it was patched, close quote. So I guess we should trust and respect this alt foundation because they learned a lesson from the experience. I don't know. They say they will report on the subject themselves, but we'll see. I wonder if this will become part of the lesson from Coinbase on Stellar, the untold history of lumens. So, joking aside, what do you guys think about this Coinbase or Stellar protocol story?
So that they go out of their way to try and hide a bug like this from the public at large by burying it in release notes and not mentioning it anywhere else. And they expect people to believe them that they'll come forward with bugs. That they seriously want people to not question their integrity when they let a quarter of the supply almost get printed out of thin air and just don't say anything. They just burn their own money, pretend like the bug never happened in the large public eye. Like, really?
Yeah, I don't get the burn part either. It's like, to me, I guess that's trying to prove like it wasn't an inside hack job. I don't know. I mean, like it seems bad. And I mean, like we know that Coinbase has been pushing this the past month or so. Not even.
But see, how does that prove that it's not an inside hack job? That's exactly how I would do an inside hack job, because you get to burn the money that the developers control that has to go to development. And then you just sell the fraudulently created money and pocket it yourself. That is exactly what I would have done if I was a Stellar developer that took advantage of that.
I totally get it. I mean, like I mean, it definitely does look like it, but it feels like, okay, if you don't want to make a big deal of it, but you want to act like the dev community's holding themselves responsible at that point in time in the Stellar protocol, it was so early on where it was like, well, this is all the devs have is this community fund. So why would they burn it unless, they are really trying to hold on to this, I guess, scarcity use case at that point in time. I don't know. I mean, this was April of 2017. I mean, that was really early in that network's history. So, yeah, it seems like they really do need to come out and give an explanation of this, because, Messari was doing this research because they're number 8 in coin market cap. The relevance of that could be debated, but I mean, they've got a lot of money. They're definitely pushing their weight around with that money because we saw from that Jeb McCaleb interview on What Bitcoin Did, he was talking about how all that was for marketing to drive token adoption. And we've been seeing it recently on Coinbase. If they want their protocol to be taken seriously, they better come out and give a detailed explanation of what happened and like why they chose the route they did.
Mm-hmm. So I guess any more comments on this?
Nope. Go for the next one.
What's going on with the civil token, Janine?
I hope I don't break up because connection's a bit bad. But if you remember in episodes 131, 132, and 133, I talked a lot about a project called Civil, which had a token sale for journalism on the blockchain project last year. And that token sale failed, but they were saying almost right away when it ended that they would relaunch it in February 2019. Well, February 2019 came and went, and there was no second token sale. Then they launched it at the beginning of March, I think March 6th or 9th, something like that. And as I pointed out on a previous recent show, about 98% of the tokens were bought once again by one entity or person, which is an even worse distribution than they had before. I think it was, it was like, part of it was like 50% and then it was 75%. So pretty bad, but now it's even worse. And I think that was worth about $300,000. I don't know how much has been sold since. I haven't checked the statistics, but like a couple of days after the sale, it was about 300,000 worth of tokens. And so I wanted to briefly go over this because one of the claims they made was that this new and improved token sale would be, quote, easier. But by easier, they mean that instead of requiring you to go through 33 steps instead of 44, like last time, I don't know if that is a fair count because John Keefe, the guy who wrote the article about how he navigated the first and second sales, already had various parts of the process checked off due to going through MetaMask, having MetaMask set up and a Coinbase account set up. So I don't know if that's really an accurate count. It might actually be closer to 40. But still, there's 33 steps that he details in the article, and I won't read them all. And I don't think anyone is actually interested in listening to how to acquire this token. But I noticed that one of the early steps when connecting MetaMask to the Civil platform is that you're asked to sign a statement that says, I control this address, and then with a date and a timestamp included in the data you sign. I'm not sure why this step matters and why it was required unless Civil is having participants broadcast when they join the platform as part of some kind of KYC measure, I suppose, or maybe they use that to count participants as they come in. Maybe they have like a bot watching or something. I have no idea. But obviously they've been promoting what they call newsrooms, which are persons or organizations who buy more than, I think it was $1,000 worth of Civil tokens. And there was a few that have stuck around since, the last sale failed. But other than that, I believe that they've only sold somewhere around 300,000 when I last looked at the beginning of March. And as I said, they were mostly bought by one person or entity. So it's not clear if that was, once again, consensus coming in to save the day for a dead on start project. But if it is consensus, that is still a vastly smaller total sum than what they were offered before the refund of their first sale last year. And so it doesn't surprise me because Coinbase has been, laying off a bunch of spoke projects and even primary employees because they realized at the end of last year that they were overstretched and they were investing in too much stuff that wasn't bringing in revenue. Surprise, surprise. So it's unclear how much interest Consensus still has in supporting Civil. It still looks like they are to some extent, but obviously at a vastly smaller sum. And apparently they're kind of measuring failure on a different metric now because their sale doesn't have an end date. It will just keep going until they sell all of the tokens, which may take forever because it doesn't look like very many people are interested, and they're probably less interested if they saw the first one fail. So yeah, this is one of those projects where like some people say, oh, it's just too early. But I would say, unless we are in a situation where block space becomes vastly less valuable and cheaper, it doesn't make sense to me still to have entire journal articles included in the Ethereum blockchain. That just doesn't make sense. There's way more cost efficient and space efficient ways to do that. And so it doesn't matter what time period we're in, I probably won't be interested in this project. So it's not only early, it's just bad in general.
The blockchain is secure.
Yeah, well, that's the funny thing, because with this all this talk about how, Ethereum doesn't have enough nodes and no one's running them or no one knows who's running Ethereum nodes. Part of the biggest problem I had with Civil from the start was that they're using Infura for both their Ethereum nodes and IPFS nodes. So this is not decentralized journalism at all. None of the participants are probably running Ethereum nodes. So how the hell are you supposed to be an active participant in the Civil platform and actually have censorship resistance if literally the company that is running the Civil project is not running their own node? That's just insane.
Come on, Ginny, just say fuck. It's okay. We're all adults here.
I'm trying really hard not to say it because I've said it too often recently and it actually keeps me up at night.
Oh, wow. Yeah, they deserve it on this one. It's going to cost you more to set up a node than this, quote, newsroom.
But yeah, dumping content like that on an actual blockchain will never make sense. It's one of the stupidest ideas in this entire ecosystem.
Yeah, it's definitely one of those where a lot of people, they hear that blockchain and they start grabbing a couple of words from immutability and censorship resistance and secure. And next thing you know, people just buy into it. And yeah, 33 steps to get your hands on these tokens. It just seems like, that's in itself is an endeavor. So trying to understand decentralization and all this stuff, yet alone journalism and good journalism and how that goes, not many people understand that either, whether or not you really understand what you're getting into.
Yeah, and I mean, still one of the funniest statements I saw was when I was pointing out to, I think her name was Maria, and she was part of one of the newsrooms on Civil, and I was telling her, like, there's already Steam, which has been putting content on the blockchain. They're not doing great. If anyone has ever been successful at using the blockchain, or specifically the Bitcoin blockchain for publishing, it's probably WikiLeaks, because they've put hashes and stuff in, and links, I think, as well, right into Opportun. And that's not a ton of data. I mean, it's still, I mean, considerably more than the average transaction, but that's a much more efficient use of it. And I think her response was that WikiLeaks was not a real news organization. And it's like, I'm sorry, who are you again? What publication do you work for? I don't think I've ever heard of you. And yet WikiLeaks is a household name. So
Yeah, that project is, yeah, it's looking kind of crazy because, like you're saying, yeah, journalism itself is kind of misunderstood. All right.
Cricket.
Well, you got another crazy project here to talk about. So, like, what else was going on with this TokenPay nonsense that was going on?
I mean, I don't have details on the project because I really don't care. It claims it has something to do with Litecoin, so I don't give a crap. But on March 28th, there was some really funny kerfuffle on Twitter. Crap is not a swear word, guys. There was some kerfuffle on Twitter where it was revealed that TokenPay would be turning money that they had made from their ICO sale into equity investments, including a stake in a lingerie company that runs Heidi Klum's fashion line. I don't really care about that, but apparently that happened. And so when various people pointed out that there were problems with this, for example, Nick Carter was saying that TokenPay ICO investors now had basically given their money to a hedge fund, but they had no rights to redeem that stake. And so the TokenPay Twitter account began responding to people, and it was absolutely hilarious. One of the biggest ones that got a lot of attention was where they claimed, quote, "We never conducted an ICO. We bartered our unique blockchain coins called TPay for one called BTC. Nowhere will you find any suggestion of an implied investment or offering of any sort. In fact, every single page on the white paper and website states that the coin has no value. We will never question the will of the consumer to barter with us. We are a product and services company," end quote. And that was actually two separate tweets, but I put them together because it's just great. And so this was followed by a series of screenshots from people who were pointing out that, yes, in fact, TokenPay did call it an ICO and a coin sale at various times, and they did not use the word barter in a lot of their marketing. And I saw at least one occasion where TokenPay responded and said that the person who made those tweets is no longer associated with their company, so they're obviously not responsible for it, or they've already deleted it or whatever. I don't really believe that, but let's continue. Tour de Meester asked, "Why would you sell something that you claim has no value?" And their response was, "Good question, but the fact is we traded it for something with clearly less value, as demonstrated by the far greater decline in BTC versus TPay since the time of the barter event." So again, once again, using the word barter, but also they're saying that their coin is worth nothing because clearly Bitcoin was worth less than nothing. That does not make sense. But okay, keep going on. We're actually not at the best one. Further, they said, quote, "We are a consumer blockchain products company, not philosophers. We did well. Clearly, everybody who participated did well. Where is the harm? Where is the foul?" I just thought it was so hilarious that people were asking like really basic questions like, how can you sell something when it has no value? Like, clearly in the act of selling or bartering, that means it has some kind of value to it. It's not like an objective thing. It's an intersubjective thing. And they said we're not philosophers. And so my proposal for the show title, which did not get accepted, was Heidi Klum and the Philosopher's ICO, because that's a Harry Potter reference if you didn't catch that. But yeah, they finally, at the end of one of the threads of comments, they said that they were a longtime follower of Tour de Meester because, quote, "We are maximalists too, just for TPay."
TPay maximalist. All right. Yeah, this TokenPay account and these tweets were absolutely hysterical in their context of like people, yeah, just trying to ask them basic questions. And yeah, this idea of blockchain coins from TPay to BTC, and this is worth nothing and that's worth less. And yeah, it's just like really goes to show that this space of this whole ICO thing is catching up with people, and a lot of people are trying to figure out a way to, I don't know, fandangle out of some sort of regulation. They're just going to say, well, we didn't do an ICO. These coins weren't necessarily tokens for an ICO. These are some blockchain coins, and we traded them for some other blockchain coins, and we're just going to play dumb.
I just want to be very clear in case the IRS is listening. I've actually never traded anything. I barter things, so I don't owe you guys any capital gains. I just wanted to be clear on that.
I would also like to point out that we didn't do an initial coin offering. We offered our coin initially before exchanges listed it. That's very different. That's OCI.
Oh, this is funny, man. Yeah, we could play these games all day, but at the end of the day, if it looks like a duck, quacks like a duck, it must be a duck. So these guys, let's go into this next one. So rounding off this subject of all this crazy alt nudes, it looks like the regulation is starting to catch up with the space. A financial watchdog called the Swiss Financial Market Supervisory Authority, FINMA, said the firm Invion AG acceptance of more than $91 million in Swiss francs from 37,000 investors was an illegal token sale. FINMA said the conditions under which the tokens were issued were not equal for all investors, that the prospects did not meet minimum requirements, and that Invion did not have an internal audit arm, which is a legal requirement. A courtroom in Zug has opened bankruptcy proceedings against the firm over, quote, organizational shortcomings, and as a result, no further measures against the firm were levied. Invion's former chief executive, Mathis Wustman, said there was no misappropriation of assets, close quote, and that the report couldn't provide any evidence there had been any intent to damage investors. So it looks like Switzerland is following a directive put forward in treating these ICOs similar to securities. It's a heads up to all these wannabe token projects that just release a coin to raise funds. If you do that in an area that already have fixed regulation for traditional assets that look similar, those legalities carry over and you are still responsible. Even though these regulations could be seen as harsh by some libertarians out there, it's not really hurting the market. 6 of the biggest ICOs since 2016 have taken place in Switzerland, and it's a better move than the outright banning the practice like we've seen in some other countries. So right now, Invion AG is being liquidated for its token sale. And yeah, I guess these other projects are going to try and avoid that hammer if they can. So yeah, what you guys think about the Swiss going after some of these projects?
I just want to point out that for anyone who thinks that they can just do an ICO in Switzerland, you will be, for the most part, extremely disappointed. It is not actually easier than doing it in the United States. It's actually more expensive per person to do in Switzerland than the United States.
Yeah, I don't doubt that. They're they're following up this FATF guidelines about, treating these things like securities.
And that was deliberate. Like they specifically, I mean, at least I heard they specifically made it expensive to do an ICO for each investor who's giving money or, accredited or not. They made it expensive so that people would be deterred from doing it at all, and it wouldn't be worth it. So they don't even have to get into the murky area of like regulations that are specific for tokens.
So I firmly believe that people have a right to be stupid, right? So I think they should just stay the hell away from ICOs and let them scam people, let them make them rich, let them gamble on that, and it's really not their thing, right? If I want to do stupid things, then I want to be able to do stupid things. They don't have to save me.
See, I kind of agree with you in the sense that like there shouldn't be barriers to doing something, but after the fact, if somebody has committed fraud, like that's a crime and that should be dealt with. Like, and I think that the important thing to no, but like Adam, like here's the thing, and like this is a line that needs to be recognized. People should be free to invest their money in what they want to invest it in. But if I come lie to you, if I tell you something that I'm not going to actually do, if I make a promise and I don't keep it, if I make a claim that is false and I know it's false, that is fraud, and that's a crime. And that should be dealt with. Even after, like, yeah, you have to wait till after the fact, but it should be dealt with.
If we are getting there to lying is a fraud, is a crime, then I don't think that's a good direction to go. It should be really our job in the digest to shit on these people who are doing very unethical stuff. But
Adam, it's not just lying.
You as a regulator,
it's not just lying that's a crime. It's when I lie to you to get you to give me money. That's fraud. That has always been a crime. Like there are thousands of years of history of that being a crime. That is an immoral thing that hurts people. And it's not the same as me just lying and going, oh, Danny said this thing about you. Like it's not just words. It is something that causes concrete financial damage to a person. And it's a crime. It hurts somebody. And whenever there's somebody who gets hurt, whenever there's a victim, it should be dealt with.
Okay, so where do you set the line? Because
Well, like,
could you give me some money? I give you back tomorrow, and I mean that I give you back tomorrow, but I won't give you back tomorrow. So am I a criminal then?
If you know that you are not going to give it back to me tomorrow when you say you will, yes, that is a crime. That is fraud. You knowingly lied to me. If you make a business model and you actually like, no, let me put it, if I have a business model, I set this thing up, I actually go do it, but it fails. Customers don't buy what I'm selling. I failed. That's it. I did what I said I was going to do. I kept the promises to the people I raised money from. There's no problem with that. I tried to start a business and I failed. But if I go to you and I ask you for money and I say that I'm going to do this thing and I don't do that thing and I go wander off and I piss all that money away on hookers and cocaine and fucking fancy lofts apartments, I just committed fraud. That's a crime. And that's the line there.
Like, I just want to throw into this discussion, you know, they're just liquidating the company. Nobody's going to jail over this. Like, I get it. You know, it's like if people, like, we sell lottery tickets, you know, like the government does here. I mean, like, there's definitely bad investments for people to throw their money at. And, you know, there's no stopping them on that side because it's all built into this legal framework. And this labeling something illegal based off of, you know, I can understand how it gets people upset, but at the same time, it's so easy to spin up one of these networks and just start issuing out, throw up a website, start throwing out tokens. I mean, like, you know, it's as easy as it was back in the day at the first days of the internet when people started getting emails from fake IRS or fake government officials or, fake companies that mirrored, we still deal with that today, but in the early days, it was rampant and people were falling for it all the time. And that's where I see we're at today, similarly.
So one last thing is that you make someone to give you money. Okay. But you don't give back the money. You don't give back 10 times more money. So it's not a crime. What would be the crime is that if someone gives you money and you have a contract that if you don't deliver this and this and this, and then that something happens. So basically the crime is when you violate that contract, right? But it just gentleman's agreement is violating a gentleman's agreement is not a contract.
Yeah,
It's not a crime.
A verbal contract is a contract. Like, you do not have to have a lawyer draw something up and sign it with a witness for an agreement to be considered a contract. There are informal contracts.
Because now there is a huge subjectivity of what counts as criminal activity and what doesn't. That subjectivity is what results in corruption, and that's what results in rich people not getting into jail. I mean, you can't build a society. Okay, you can, because we already built, but society shouldn't work on terms. Those can be interpreted in hundreds of different ways.
That's why we have courts.
Yeah, and this court decided that nobody's going to jail. The company just is losing all their money from this token sale. And they're, I think if like we're talking about, somebody going to jail, it kind of makes it a lot heavier in what we're discussing. But if that's the way that they're doing the penalty on it, I don't think it's that I think it just discourages people from doing something where they're likely to commit a fraud in their ability to sell these tokens. But for sure, it's like I get where you're coming from on this.
Alrighty, though. Next up, Janine.
Oh, yeah. So what's going on here?
With Mark
Konnichiwa?
Karpeles.
Konnichiwa.
So Mark Karpeles' lawyer contacted the Associated Press to make some statements regarding their attempt to appeal the decision made by the Tokyo District Court, which we discussed in episode 165. Ogata will claim that Karpeles' actions were part of, quote, an effort to minimize the damage. And the authorities were confused about how cryptocurrency exchanges worked and were trying to pin the blame for a cybercrime on Karpeles, who was actually a victim, end quote. That's all I really have to say, because this was entirely predictable. Like, people do appeals, even though, as I said the last time we talked about this, in terms of the severity of his sentence, Karpeles basically got a get out of jail free card. It was an absolute deal. He won't even need to go to jail unless he's a naughty boy again. So, like, really just shut up, Mark, and go away and deal with your not jail sentence.
Yeah, I mean, like, I thought he was getting away. I mean, you get away that easy. I mean, like, he did spend some time in jail, but for sure there was a lot going on there as far as people not understanding the liabilities they were undertaking. And yeah, I guess he wants his name to be absolutely cleared of this, because what was it he was found guilty on, where he had the time served? It wasn't extortion. It was
I believe it was manipulation of data records or financial records, and one other thing that I can't remember, but something mostly around that manipulation of records.
Yeah, he was running like a DNS server before Gox, so I imagine that would be pretty relevant for his reputation going forward if he wanted to get back into a similar position. So yeah, not too surprising, but yeah, it is kind of like you already got off real light, man. Any other comments on Karpeles and Gox?
Nope.
All right, so let's get into from one shady exchange to another area of the space with lots of shade on it, darknet markets. So this is a developing story, and naturally details are going to be minimal given the space they are working in. But on March 26th, customers and vendors of one of the largest darknet markets, Dream Market, logged in and were unable to use basic functions of the market. Dream Market had replaced the listings of various products with a message that said, quote, "This market is shutting down on April 30th, 2019, and is transferring its services to a partner company." Then it lists an onion address and says it's currently offline but opening soon, close quote. So given the fact that it's a darknet market and nobody knows who anybody is, this naturally drove lots of speculation. Discussion on Reddit and another marketplace similar in size called Dread is where most of this discussion points come from. The fact discussed is that this news is coming to us after 7 weeks of intense DDoS attacks on the platform servers. And at the height of the attacks, users speculated it was law enforcement in an effort to bring down the marketplace. The creators of Dread said it was an extortionist. An extortionist was behind the attack, trying to get a sum of $400,000 from the administrator. A Dream Market staffer said, quote, "The problem with the DDoS was a big issue for Dream Market. Our tech team of Dream Market worked as hard as they could, but the real problem about the DDoS attack is on the Tor browser side. So we had no power to resolve this error," close quote. These staffers also believe the so-called transfer is an attempt to thwart the attack by rebranding the market and hoping the attacker fails to make the connection. Although these staff members have come out to speak, we have yet to hear any official word from the administrator, Speedstepper. Now, the announcement came on the same day that the federal law enforcement agencies announced the conclusion of Operation Saboteur. It was an operation that targeted drug traffickers on the dark web, and it led to the arrest of 61 suspects connected with dark web drug trafficking. According to the announcement, investigators also closed dozens of accounts and on an undisclosed number of dark web markets. A few seasoned darknet market users suspect Speedstepper's absence and the closing of Dream Market as a result of this operation conducted by law enforcement. When the FBI seized Alphabay, they knew the users would flock to the next largest dark web marketplace. At that time, that was Hansa. By the time the FBI seized Alphabay servers, Dutch law enforcement had already infiltrated Hansa by arresting the admins, moving Hansa's servers under their control, and then posing as the admins to the unsuspecting staff members, customers, and vendors. Whatever happens from here has yet to be written, but right now everyone's alarms are going off. They are thinking it could be a harmless rebrand all the way over to the worst possible outcomes. Right now, users still have access to their accounts, and they've been given a warning about the upcoming shutdown so they can withdraw any remaining funds. So it doesn't look like an exit scam, but something is going on over there at Dream Market. You guys have any speculation on this subject?
Well, I have some side notes there that the only thing I don't like about the darknet marketplaces and darknet and centralized mixers and things those are operating on the darknet. Well, not the only thing, but one of the things I don't like is they are hugely profitable businesses and they never contribute anything back to any development or anything, but they would have the means to do so. It's that was just a side note. Regarding that, it was a DOS attack on the Tor browser side, and I'm not sure how that really works. And if you fix something in the Tor browser, then it's not gonna be a DOS attack. And that's not how you even DOS attack. You don't use the Tor browser. You use the Tor daemon for that. Can it be done? It's a good question. I didn't really see too much technical information, so I don't want to go speculating too much.
Oh, with the DDoS?
Yes.
They were just overloading the entry points for the Tor service.
So what they said is that it was one developer with one computer, probably. No?
It's probably not a big server operation, but I mean, it's Like, if you have the maximum amount of introduction points for the hidden service, and once you just start jamming those up and then jamming the nodes that are providing that, I mean, it's really just an overall big vulnerability in Tor, like in general, for hidden services. You know what I mean?
Yeah, I'm wondering about that too, because if this is possible, then it's really fucked up. But I think there is something else. I mean, I can imagine I open a bunch of Tor circuit streams and keep hitting a website, just hitting, and but I don't think that's effective, or is it? It just no one tried it. It's great questions. Really, not enough technical information to make any conclusions there, I think.
Well, I mean, it's like
Well-
when you do something like that with Tor, like there's really no simple way to ban a client during a DDoS. Like you can just spin up another circuit, like throw through that. Like you can just keep doing it over and over and over, and there's no like hard line IP connection tied to things that you can ban. Like I'll just spin up a new circuit, go through a new Tor route, and you won't have any clue where the hell I'm coming from.
Yeah, but you don't have enough bandwidth for. No, I think it's more complicated, because the whole Tor architecture is, as Jenin is always saying, is centralized. It's not completely centralized, but there are some nodes those are more equal than others, right? I don't know.
Yeah, the directory authorities, I think I can't remember how many there are now. I think there's like 8. But if you don't have the directory authorities running, I don't know what kind of I don't know whether they need constant uptime in terms of the network working. But if you don't have the directory authorities, that's a big problem. So there are basically 8 nodes in the Tor network where if those go down, basically Tor goes down.
To my knowledge, it's a distributed hash table, which I'm not quite sure what that means, but it has in it that it's distributed. So would it really just mean it's distributed between 8 nodes?
I mean, it was a big enough deal that, let's see, it would have been 3 years ago when someone decided that they weren't going to run one anymore. It was like the biggest thing on the mailing list being discussed, that it had to be replaced right away. So,
but real quick, I want to get this in, but we're running close to the clock. But I really think that this is probably the government or some government agency who finally realized this is a quick, inexpensive way from their point of view to fuck with things. Because I mean, it's like I was saying, though, Par, like you've got your hidden service, you have the entry points to connect to that, and if you want to DDoS those, like I can create a Tor circuit to those through anything. And if you ban that circuit, I just make a new one. And I just make a new one. Like that, you can't just ban this IP address and the source is permanently banned because you don't know where it's coming from.
The question arises then that why didn't any government agency just overloaded the Tor network previously, completely, and made it permanently unusable? Because it would be that simple, then they would do that.
Well,
because they used it, and they will take it down when it's necessary for their own operations, but they use it themselves. Like they benefit from it being there. So
they are not that homogeneous. For example, China really doesn't like Tor. The Chinese government or some specific agencies of the Chinese government really doesn't like Tor. They would be able to do that. It would be that easy.
They don't like the populace having access to Tor, but the government themselves definitely have a use for it.
Yeah, and I mean, it could be corrupt officials. They were talking about there's some extortion attempts But yeah, just real quick, I think there was a good point in the chat about how does this affect market structure, because darknet markets used to be huge in Bitcoin, and I think it does serve a relevant point. But I think these darknet markets are getting so efficiently get spun up, and people moving over that it's not going to affect it too much. So where are we headed next? Bitcoin network traffic.
So by the way, just to give a big picture, we have a fair amount of Tor alternatives out there and working already. So if something shit would happen, then it would it would take time and a lot of work, but the whole infrastructure of Tor would just shift over to that other thing, whatever it is, Zeronet, I don't know, I2P, BitMessage, and all kind of anonymity networks out there. Probably two of them not usable for the purposes I was. Never mind. Okay. So what's the next story?
Well, the next one is it's not so much a story as like just noting some milestones that, according to blockchain.info's charts and various other block explorers, there has been a spike of transactions on Bitcoin to the point where there's about 400,000 within 24 hours. I don't think that's been consistent, but there was a spike recently. And so that's about 17,000 per hour. Or 277 per minute. And I think that ranges somewhere around 4.5 transactions per second, which might not sound like a lot, but that's just because there hasn't been a lot of use lately. And SegWit adoption is nearly at 50% of on-chain transactions. And the current average block size is 1.2 megabytes, which I think is where it's been hovering for quite a while now. So that's just a quick update.
I notice more and more places can send to batch 32 addresses since the Bitcoin J stuff. For example, Gemini is one of the thing that was using Bitcoin J. Turned out, I'm not 100% they were using, but Bitcoin J released the new version, and then a couple of days later they were able to send to batch 32 addresses. And I went to their website, checked out their job applications, and they were looking for Scala developer, which is Java something, I don't know. So they were probably doing that. Now Kraken sends to batch 32 addresses too. So right now I start to think I just don't even try to to hack around the thing that people cannot send to Wassup because it's batch 32, because the adoption seems to be getting another wave. Let's just say that.
And notice that fees are not like $100. Wow. It's almost like when you deal with efficiently using block space and better fee algorithms, a lot of the problems from 2017 are not as crazy.
Well, it's not like we did a lot. We did a lot, but it's not like we did enough things to be able to withstand the mass adoption. But not long ago, I saw some statistics that we have the same volume as when we had the volume in 2017 when the fees went up. So we have the same volume, but now the fees are pennies and not dollars. So we did a great job, but we have to do much more.
Alrighty. And I guess last up, before we get to know Para's mysterious question, is Bitmain announcing Antminer S17s, their newest 7nm chip, is going on sale April 9th. Guess what, guys? This is like totally super improved energy efficiency and more hash rate in a miner. We made things better. And that's literally pretty much all the material content in their blog post regarding the release for this. And also, I find two things very suspicious here. One, the announcement of this right when they're in negotiations for setting up 200,000 miners to mine themselves, with the rainy season coming to the southwestern provinces and providing cheap hydropower. And also another thing is, if you look in the Twitter thread about this, almost half of the tweets here are people losing their shit because apparently Bitmain handed out a bunch of coupons for savings in future purchases. And they announced the sale date for this S17 after these coupons expired. So they gave a bunch of coupons to save bulk customers money and waited to put their new machine on sale until all of those coupons expired. Great business move, Bitmain. I'm sure you're going to get a lot of endearing love from your long-term customers because of that.
Oh my goodness, Bitmain doing it again. I don't know who's with them at this point.
Yeah, I think most of what they actually produce for this, if it's any sizable amount, I'm betting it's going to be so that they can mine themselves.
Yeah, I think one of my favorite replies to this tweet is where was it? Is it so I can give him the credit? The big Kurkowski says, now with a free month of added wear and tear included. All right.
Mine your mother if you want to mine. Okay. Let's go. Let's go. Let me ask you a question. What is the most private way to broadcast Bitcoin transactions?
Your mom.
Offline.
Open dime.
So it is Dandelion. But open. Why do
No,
you
it's
even
your
say that?
mom.
It's offline.
Seriously, why? What do you mean? I don't get it. Why open dime?
I mean, you're not broadcasting to the network, but you're making a transaction. I don't know, whatever.
Never mind.
A
Never
broadcast
mind.
transaction.
So it's Dandelion because it's an anonymity network that been just built to this, but we don't have Dandelion yet. So what is the most private way to broadcast Bitcoin transactions with the current network? It is broadcasting to one node over Tor and then wait until that one node broadcasts to everyone, right? This is the
Yep.
most private way. So what if you do it? What do we do in Wasabi? We broadcast the transaction to the backend server because we didn't have Tor. We broadcast the transaction to the backend server over Tor because we didn't have Tor connection to the on the peer-to-peer Bitcoin network, which is not that important. But anyway, Nicholas added Tor to the peer-to-peer Bitcoin network. So now we could broadcast the transaction to one peer and use the most private way. But there are some problems with this. So why is it less private to broadcast it to Wasabi's backend over Tor? It's less private because Wasabi's backend can see all the transactions those have ever been broadcasted with a Wasabi wallet, which is a huge data, and I don't think there is any way to use the data for anything. But anyway, it would be even more private if we would broadcast to one peer. Okay, so I started implementing it, and now I have a problem that I have to verify that transaction have been broadcasted, propagated to the network. Okay, so what do? I look at other peers if they give me back the transaction, and if they give me back the transaction, then I say, okay, he broadcasted the transaction, he propagated the transaction properly, so we are happy. But the question arises, what if those other peers are actually the same peer that I propagated the transaction to?
Well, you at least see that they're propagating it in your direction. And I mean, it's not a proof that it's gone to any other nodes, but it's at least a probabilistic indication that they're broadcasting it to other nodes. Because if you send it to them through Tor and they broadcast it on the ClearNet, then they can't really tell that you're the same node. You know what I mean?
Yeah, exactly. They don't know who to Sibyl attack, but in theory, Sibyl attack is kind of possible, because if we are only connected to them, then they could withhold the transaction, and we would think that, hey, we sent this transaction that we didn't really. But of course, they don't know who to Sibyl attack, but still, it's plausible. So now the dilemma is that, okay, what should I do? Should I go on the privacy route? And comment on the chat that what you think. Should I go on the privacy route, broadcast to one peer, and then wait for other peers to verify that, hey, this has been broadcasted? Or should I make it more stable in a way that I broadcast the transactions over Tor to the backend server, and then at least the users would be sure that, hey, okay, this has been really propagated and there is no issues with that. So, right, it's a direct dilemma between privacy versus validation, stability. Yeah, and I'm not sure what to do. What do you guys think?
Well, I mean, really, you could just... Well, I mean, obviously, like, you're going to have to either modify your mempool logic or have some new code that's going to be monitoring your mempool rejections. But, like, I don't see what the issue is with just connecting to the peer you're going to broadcast through over Tor and then just connecting to a few well-connected nodes over ClearNet. And I mean, like, you might not get an immediate indication like you would probabilistically if you have a Tor and then a ClearNet connection to the one node you're broadcasting to. But if it gets sent out, eventually you're going to see it from those well-connected nodes.
So one thing that's worth to note is that every time a block confirms, we send a request to the backend and ask for all the hashes that he has in the mempool. So he gives the hashes back to us, and then we can see that what transactions in our mempool really real transactions and what are just trying to mess with us. But still, I mean, it's still, if you just cannot avoid that people, that what if the nodes are controlled by the same entity? It's extremely unlikely, because you don't know who to lie to, right? Because they are connecting you over Tor. But still, there is some theoretical issue with that. I'm not quite sure I'm comfortable to take the risk, but probably I will go on the privacy route, because if you have a Bitcoin full node, then you can make sure that those transactions are really have been propagated. So that's good there. But without a Bitcoin full node connected to your Wasabi, it's kind of a gamble. It's not a gamble. Yeah. Anyway, what do you guys think in the chat? Let me look at it.
Well, I mean, you could just use like a bunch of pseudo nodes. Like, you could literally just have like a non-full node client connecting over the peer network and just have a couple of those scattered around. Like, just accept connections, grab the data, and then just dump it. And all you really have to keep track of is the transaction you're looking for.
Yeah, I could implement Dandelion between Wasabi peers. Yeah, that's definitely a possibility. I mean, both of these things are really theoretical because broadcasting to the server probably doesn't do any privacy issue. It just would be more private to broadcast to a peer, and that probably doesn't have any security issue in practice. It's it's a small dilemma. I'm not sure it's important, but huh. Okay, guys. So this is what I've been thinking of lately, and I will report back when I made my decision and probably go on the privacy route because, well, it's Wasabi, right? What are your final thoughts?
I would say that you're right on the privacy side of things.
My final thought is that pineapple on pizza is good.
What that crazy? Oh man.
I don't know why people react so strongly. Like literally the only time I eat pineapple.
Wrecked.
Uh-oh, robot Janine. Pineapple's great anytime. I like pineapple just by itself. Go a little crazy sweet tooth with it.
All right, Rick.
All right. Yeah. So my final thought is it looks like the Ethereum core devs are starting to figure it out, man. This guy, Lane Reddick on Twitter said, Ethereum governance has failed. We are de facto technocracy. We're a small group of technocrats. The core devs have final say over what goes into the protocol. He's got a nice little thread there that goes into details about their options for the future. But I think it gives a real sobering outlook towards what Ethereum is looking at. And I mean, like as someone that's near all these devs here in Colorado, I could sort of attest that this is kind of the way things are. Everybody's sort of stuck in this, like, where do we go from here moment? And we definitely had that history in Bitcoin. And, you know, I'm going to forward that over to them as far as just like finding a route forward. But for sure, it's something where a lot of those guys for a long time now have been like kumbaya into the sunset. We're going to scale and everything's going to work perfectly. It looks like some reality starting to set in. And yeah, I just wanted to call some attention to that thread.
All right, and I haven't done this in a while, and I'm gonna point at myself on Twitter just because this is hysterical. But welcome to the timeline where some idiot on Twitter thinks that I actually work for Blockstream. And when I point out that I don't,
You don't?
thinks that I'm actually trying to get people to think that I work for Blockstream so that people think I know what I'm talking about. So let's just give a round of applause to all the people on this planet who are actually that stupid. It is a miracle that you are still alive.
Especially in this space. My goodness.
We are in a bubble, right? I mean, it's sarcasm doesn't really work on the internet, but in the people who we know, they understand that what's going on. But newbies who actually still eat the Bitcoin Cash propaganda, I would not really give too much hope for them to understand that. For example, you are not a Blockstream employee.
What, dude? You're telling me that Blockstream actually doesn't have 202,884 employees? What?
Yeah, I like that Samson's putting out that Blockstream spy hat. That was pretty sleek.
Yeah, I think I might have to change my name.
I have to hire Samson more to do some marketing at Wasabi because he's doing it really well.
If you need marketing, I make memes.
Shinobi, isn't it hard to sexually identify as Bcash and also work at Blockstream?
And memes
No.
are not legal in the EU, so
Oh, that's why.
Exactly. Don't you, dude? Come on, get edgy. Get that cringe cred. All right, though. We need to wrap this up, or it's gonna take like 4 hours for YouTube to finish video processing. So, I guess that is a wrap for final thoughts, and we will see you all on Wednesday. Toodaloo.
Later, everyone.